Are you an NFT seller or artist? If so, you may be aware that NFT sales taxes are applicable to many of the NFTs that you have sold, and this is becoming a hot topic amongst state tax agencies and the NFT industry and Web3. Today I want to go over the marketplace's role in collecting NFT sales taxes and what are some of the risks for NFT marketplaces that are not complying with sales tax regulations. Whether or not a marketplace is required to collect sales taxes on behalf of the sellers that are selling NFTs on their platform is going to be dependent on a few different factors. Firstly, this is going to vary on a state-by-state basis. So we're going to have to look at each state, how it relates to the marketplace in terms of the marketplace's nexus with the applicable state and the product taxability within that state, and then we'll be able to determine on a state-by-state basis if there's sales tax collection and remittance requirements at the marketplace level for that particular state. The first thing we need to look at on a state-by-state basis are nexus considerations, both physical and economic nexus. So this means that if you're physically located in a state, that can potentially create a physical nexus for that marketplace. So if you have an office in a state or a warehouse or anything like that, any physical presence in a state, this can trigger a physical nexus, which in many states is going to require that marketplace to collect sales taxes based off of the physical nexus. In addition to physical nexus, there's something called economic nexus. Economic nexus stipulates that there's certain thresholds of sales, either in a dollar amount or in a unit amount, that if you exceed this threshold, you have a nexus within that state. So, a marketplace can be located in Pennsylvania, but it could be also having sales get completed where the sale is sourced to another state. For instance, the sales get sourced from a Pennsylvania marketplace to the state of Washington. If you sell over a certain threshold in Washington, over $100,000 or over 200 units, for instance, then at that point you'd have an economic nexus within that state of Washington, and then you would have to collect potentially both in Pennsylvania and in Washington. So the first thing a marketplace needs to consider is what type of nexus do we have in each state, and how is this going to impact our sales tax compliance strategy? The next thing that these NFT marketplaces have to look at is what products are we selling through our marketplace. Sales taxability can vary on a product-to-product basis, and the taxability of any given product can also vary on a state-by-state basis. So there's over 30 states that currently tax digital products and goods for sales taxes. It's highly likely that NFTs are going to fall into this definition and are going to be taxable within these states. So you're going to need to look at each state's specific definitions. If they have NFT guidance, we have a handful of states with NFT guidance, such as Washington State, Pennsylvania, other states who are focused specifically on NFTs, saying they're taxable. But then we have many other states who have focused on digital products and goods, where NFTs are likely going to fall into that category, where NFTs are also likely taxable. So we need to be looking at both nexus and product taxability, and then market facilitator rules within each state, and that's going to determine the requirements for marketplaces to collect and remit sales taxes on behalf of their sellers. So we've only seen a handful of states release guidance related specifically to NFTs, and for other states we need to consider guidance around digital products and digital goods, since many NFTs are going to fall into this category. One state that has been leading the charge in terms of providing initial guidance is Washington State with their interim guidance. They provided a lot of initial guidance on a lot of different fronts related to NFT sales taxes that's out of the scope of this video. But one thing in particular is they did address the marketplaces and the marketplace facilitator sales tax collectability requirements. And basically, in Washington state, NFTs are considered digital products, and marketplaces that are facilitating the sale of these digital products within Washington are going to have to collect sales taxes based off of the market facilitator rules that already exist in Washington state. So what does that mean for you as a marketplace in this example of Washington? If you are a NFT marketplace and you have either a physical or economic nexus in Washington, it's likely that you're going to have to collect sales taxes on behalf of your sellers that are selling with sales sourced in that state. And again, this is an example specific for Washington because Washington has been out ahead of the NFT guidance, but looking at each state individually, if there's guidance that NFTs are taxable, or if there's guidance that digital products and goods are taxable and NFTs appear to fall into that category, and you have a nexus in that state, in addition to Washington, there could be many other states that you're going to have to collect sales taxes as a marketplace facilitator. So what does this mean for sellers that are selling on NFT marketplaces that currently may not be in sales tax compliance? They may not be collecting and remitting sales taxes on your behalf. Well, the implications to this is going to, again, vary state to state, but you as a seller should assume that you're responsible for any sales taxes associated with your sales. It's very likely that state taxing agencies can go after the marketplaces for uncollected sales taxes, but it's also possible in many states that they can go after the seller themselves for non-compliance and not collecting and remitting sales taxes. So again, it's going to vary state to state, but you as the seller that are selling on an NFT marketplace that isn't collecting and remitting sales taxes is at a very large risk, because that sales tax audit could come back on you as opposed to the marketplace. It could also come back on the marketplace, but just because you're selling on a marketplace and that marketplace isn't being compliant, that's not absolving you of the compliance requirements that are associated with the sales that you've completed and benefited from. So what are some of the risks for marketplaces that are currently not complying with sales tax regulations and not collecting and remitting sales taxes appropriately? Number one is penalties and interest. States can impose penalties and interest for any unpaid taxes that weren't appropriately remitted to the state, both in the correct amounts and on time in terms of your filing requirements. Damage to your reputation. If you're an NFT marketplace that starts creating compliance issues for your sellers and potentially even for your end customers in the form of use taxes, and just in general possibly getting put out in the media where XYZ marketplace is not complying with tax requirements, not paying their fair share in taxes, going under audits, these are all events that can really damage your reputation and hurt the growth of your platform and your company. Another one is legal action. Many states are going to be able to go and take legal action at marketplaces that have a presence in their state that are not complying with sales tax regulations, and this could be fines, penalties. This can be cease and desist on your business activity within that state. There can be many repercussions for not complying with sales taxes that could impact your business continuity. And the last risk is there can be an increased compliance burden in the future in terms of having additional reporting requirements, more frequent audits from the state, and more investigations from state tax agencies. So the risks are very large all around when it comes to your reputation, to your bottom line, and to legal implications when you're dealing with these state taxing agencies. So it's very important for marketplaces to understand the compliance requirements related to sales taxes and get compliant as soon as possible. So what do marketplaces need to do to get into compliance with sales taxes? Firstly, you need to work with the tax advisor that is experienced on this topic, that understands sales taxes, understands digital assets, including NFTs and cryptocurrencies, that can do a compliance assessment and a risk assessment for your business and your marketplace to determine where should you currently be collecting taxes, where do you possibly have to collect in the future based off of your business growth plans, and just design an overall compliance plan to make sure that you can align your business activities with these sales tax regulations. So number one is just understanding with the tax advisor what the tax requirements are for your marketplace. Then from there, we need to create a system that allows your marketplace and your platform to collect and remit these sales taxes appropriately. So this is gonna involve some automation and integrating some software into your platform. My team has built Digital Impost, which is the first automated sales tax solution specifically for NFTs and for digital assets. So you're going to want to take something like Digital Impost and integrate this into your platform so you can automate this sales tax process in terms of taking your customer's address, sourcing the sales tax sale to the right sales tax jurisdiction, returning the right tax rate based off of this that's calculated in terms of the native cryptocurrency that the transaction is being completed in. So we want to automate all of that front end process. And then the next part is we need to get a compliance system on the back end. So after we've collected the appropriate taxes and we have all that data on the front end, we need to collect that data on the back end and then report that and remit the taxes that we've collected to the appropriate tax agencies based off of your filing deadlines, which are going to vary state to state, tax jurisdiction to tax jurisdiction. Some requirements are going to be monthly, some quarterly, and so on. So on the back end, Digital Impost can automate this process as well in terms of taking the information that we've collected from the customers and then preparing the tax forms for that appropriately and then processing them in a timely manner with the state taxing agencies. So you as a marketplace need to first understand the tax regulations that are being imposed on you when it comes to sales taxes. Then you need to get a system in place that can automate this sales tax collection process for you in a seamless manner, so we're not creating a bunch of friction for your customers to mint an NFT. And then we need to also make sure that we have a streamlined automated process for the actual tax reporting and payment remittance to the states on the back end. Are you an NFT artist, seller, or marketplace that is worried about complying with sales tax regulations for your NFT sales? Look no further than Digital Impost. We've automated this process for you from beginning to end for the entire sales tax lifecycle, from calculating the tax rate to collect from your customer in native cryptocurrencies, to collecting the appropriate information for reporting purposes, to automating the reporting to the appropriate tax agencies in a timely manner. Digital Impost has you covered. Protect your bottom line, protect your reputation, and get into sales tax compliance today.